Hello and welcome to Morning Markets. I'm Roger Peterson. Thank you very much for joining us. Here are some of the stories we're tracking for you in the BNN Bloomberg newsroom. U.S. President Donald Trump says Canada lives because of the U.S. During his speech at the World Economic Forum in Davos, the American president saying the U.S. is building a golden dome that is going to be defending Canada. Trump also says Canada gets a lot of freebies for which they should be grateful but are not. On trade, he said tariffs have radically reduced America's ballooning deficit. Now, also during his speech, Trump said he will not use force to acquire Greenland. The president says he is seeking immediate negotiations to discuss the acquisition of Greenland. Trump also says no nation or group of nations is in any position to secure Greenland other than the U.S. On NATO, the president said the U.S. is being treated very unfairly by the alliance. Shares of Cenovus are trading higher after a report from Reuters that the company is considering a sale of its oil and gas assets in Alberta. According to the report, the assets are worth about $3 billion, and Cenovus is looking to cut debt after its recent takeover of MEG Energy. The report comes as the energy company sharpens its focus on its core oil sands business. And looking at the markets, everybody having a better day than yesterday for sure in the wake of Donald Trump's speech in Davos. You can see the TSX is up nearly half a point right now, and it's up above 32,900, looking to push back up into record territory. South of the border, it is a similar situation. Everybody well into the green for today. The S&P 500 up by almost 1.1, the Dow up by almost a point, and the Nasdaq up by about 1.25. We are continuing to follow reaction after U.S. President Donald Trump made his speech in Davos this morning. For more, we're joined now by BNN Bloomberg's Lindsay Biscaya. It was quite the interesting speech. Covered a lot of ground, shall we say.
An hour and 12 minutes, yes, was this speech. I know you listened to the whole thing. I did as well. And just in terms of reaction, just seeing a report that actually a key group of European parliamentary members have blocked a vote to ratify that U.S.-European trade deal after that speech this morning. So that's just coming out this hour. A couple of board members are actually tweeting about that right now. So we're going to keep you posted on that because that's a big development in terms of trade between the two nations. But yes, this was a very interesting speech. All eyes on Davos as Donald Trump landed and gave this speech this morning. He started off talking about the U.S. economy, how much it's grown, how much it's boomed. And then it took him a while to get to the meat of the conversation, really what everyone was waiting for, which was Greenland, right? Yeah. Like that's been the conversation that we've been having.
Did you ever think we'd have that conversation? The meat of the conversation was about Greenland.
About Greenland, yes. Yeah, I know. But that's been where all the focus is, right? Ever since Donald Trump says that the U.S. wants to take control of Greenland. So today, he said he's going to seek immediate negotiations to acquire Greenland. He says this is not a threat to NATO. He says he has tremendous respect for the people of Greenland and Denmark, but he kept going back to the point, which is we want that piece of ice for world protection. He kept calling it a piece of ice. You're confused.
He called it Iceland, I think, at one point, too.
He did mention Iceland, and I was wondering whether he meant
we were all confused
Greenland.
By that.
Yes. So I'll go back to that part and listen to that again. I'll clarify for you.
It was a fascinating spot.
It was fascinating. And he kept talking about World War II and referencing how the U.S. helped Greenland out when it was in a pickle. And then he said the U.S. gave it back to Denmark and the U.S. shouldn't have done that. So he went on about Greenland for quite some time. And he was actually asked about it right after his speech. Here's more on what he had to say about why he wants Greenland.
It's costing Denmark hundreds of millions a year to run it. And Denmark's a small country and wonderful people. But, you know, it's very expensive. It's a very big piece of ice. And it's very important. I mean, I don't want to repeat the speech, but it's very important that we use that for national and international security. That can create a power that will make it impossible for the bad guys to do anything against the perceived good ones. And it's a great block for Europe. Just like, you know, Denmark was supposed to spend hundreds of millions of dollars. They didn't spend the money. They didn't spend anything almost. And we'll see what happens.
He said that NATO and the world has a choice. He said, quote, "You can say yes and we will be very appreciative, or you can say no and we will remember." So some strong words. And he went back to Greenland a couple of times throughout that speech.
He did indeed. And Canada got mentioned very briefly,
Yes.
but
it was brief.
but-
Yeah. After such
but a lot was said in that.
A lot was said. Yeah, exactly. I mean, it was such a speech yesterday from Prime Minister Mark Carney. He apparently wrote the whole thing himself. It had a standing ovation. But it was all about, middle powers staying strong and coming together against major world superpowers, obviously talking a lot about the U.S. in that speech. And Donald Trump said that he was listening to that speech. He said that, the U.S. has been defending Canada for some time. He said Canada was not grateful. And he said when he was listening to that speech, Mark,
Yes.
referring to Mark Carney, did not sound grateful, in that speech. And he said, quote, "Canada lives because of the United States." So some interesting words, but that was pretty much it. He said that the U.S. is going to remember what Canada had to say yesterday, and then he moved on.
Yeah.
So again, a lot to, and we know Mark Carney's his team has been asked today why he's not staying around to maybe have a conversation with Donald Trump while the two are both in Davos.
Yep.
But that's not happening, obviously. Mark Carney's flying out today.
But Trump is meeting with, I think, he has 5 or 6 bilaterals coming up. So
There's a couple of meetings coming up, so I'm sure we can expect more developments.
And we're on the radar.
Yeah.
For good or bad, we're on the radar. All right,
are.
Lindsay, thank you for that. BNN Bloomberg's Lindsay Biscaya. And we'll get market reaction up next to U.S. President Donald Trump's speech in Davos. Stick around. U.S. President Donald Trump increasing the pressure on Europe to try and take control of Greenland, facing the consequences, was hinted by claiming that NATO owes it to the U.S. to grant it full rights to the Arctic territory. Let's get a market reaction from Teresa Schutt, Chief Investment Officer at Harborfront Wealth Management. Teresa, thanks as always for joining us. Did you get a chance to watch the speech?
I did. It was interesting. As always, it covers a lot of topics.
Very diplomatic. Very diplomatic.
He doubled down on his demand for control of Greenland. Did indicate, of course, that he wouldn't use force, and then took the opportunity to launch a fair bit of criticism of Europe and obviously tout his own agenda. So I think what you're seeing in the markets, obviously, is a bit of a bounce back from the softness we saw yesterday. Clearly, is this kind of a taco? We're not sure yet, but it's certainly consistent with his bargaining or kind of negotiating tactics, where he starts with these really extreme offers or positions to anchor the conversation and really put his opposition on their back heels. So, is he responding to, what he thought, might become more market volatility, like after Liberation Day or not? We're not really sure, but I mean, certainly the market's taken it as a positive sign. But, we're not out of the woods. Markets could return to trade war mode. That means more volatility and, of course, the potential for higher inflation.
Well, he didn't really mention tariffs at all, so we don't know where his mind is with that. And is there a danger in that if the markets just start assuming that everything is a taco? Is there a danger to that?
I think it is. It's like the boy that cried wolf. And I think we saw that, a little bit yesterday where, typically this type of, action, or kind of rhetoric would be considered, 20 years ago as something quite significant and something quite market moving. And I think, investors or traders are a little afraid to go too heavy into the down trade. In case it kind of hurts them, and obviously it comes back, as we've seen. So I think we just have to accept that this is part of his tactic. It's a way to kind of create urgency, perhaps that's not there. Again, to I think not necessarily weaken his opposition's position, but certainly put them again on the back foot. And it seems to work. So I think that's sort of being built in now to the investor mindset when we receive these kind of sweeping announcements.
And with the sell-off yesterday and then the buyback today, buying the dip today, is there any one particular area, or is it fairly broad-based?
I think what's interesting, and obviously market broadening is hopefully becoming a theme going forward. I think this was just a general kind of buy, I think, or kind of positive bullish mentality because the news was obviously somewhat reassuring. But I think going forward, take this noise out of it. if you look at the market generally, the Mag 7 is frankly becoming the Fab 4 or maybe the Terrific 2. Only Alphabet and NVIDIA really outperformed the S&P 500 in 2025, and Mag 7 stocks are doing worse than the broader benchmarks already this year. The only thing they have in common is frankly that they're trillion-dollar companies. So going forward through 2026, we can expect more winners, more losers. I think there's still some fatigue amongst investors about, is this a bubble? And I think people are starting to very, very intelligently look at other opportunities outside of AI, and particularly those industries that will benefit. So, financials, I think, are very attractive in terms of efficiencies that could be improved with AI. Healthcare, logistics, obviously, are there. And I think we're going to see some of the AI players come under a bit of pressure as they're starting to have to price in maybe some of these tariffs. Amazon just announced yesterday that they're going to have to start increasing prices, and that's going to weigh on profitability. But that said, I mean, these upstream and downstream opportunities from AI are still very attractive. So if that means less kind of narrow leadership, that's great. But that's a longer term, I think, outlook for 2026. I think right now the markets really have to focus on what happens at Davos, where we land with tariffs, because I don't think those are off the table. If Trump doesn't get what he wants, and it's somewhat unclear, I think, why he wants this so bad. There might be other motives. And if Denmark can kind of, talk him off the cliff or de-escalate the situation, then maybe tariffs are off the table. But it's too quick to say. And so I think, investors still should be cautious.
And we still, of course, we've last few weeks, we've been talking about hearing from the Supreme Court on their ruling on tariffs, and they keep, I don't know if they're holding, I don't know if maybe they haven't finalized their decision or if they're holding off waiting for that perfect moment, whatever that may be. But what kind of an impact could that have when it does come out?
I think that is actually a very interesting development. You're right; they keep pushing it off, and that will have obviously significant implications. Now, are there opportunities to appeal that and kind of drag it through the courts? Maybe, I don't know. I'm not a legal expert, but I still think that right now we just have to accept that tariffs are in place. And we can see that Canada is clearly adjusting to that. The recent deal, the landmark deal that they made with China, the recent partnership with Qatar, even Europe, they're the largest trade bloc in the world. Obviously they depend on U.S. for their exports, but they've been sourcing other trade corridors and adjusting their supply management. So I think yes, that could influence things, but my view is tariffs are here to stay. The U.S. government has become highly dependent on the revenues, and I think the world has started to adjust. So I find with new tariff adjustments, they're still obviously impactful, but I think the reaction is going to be a little bit less. Where we get into, I think, a more serious situation is where the retaliation starts and maybe restrictions on certain goods, like Europe has, somewhat threatened.
We can save that for tomorrow, because I'm sure there'll be more talk of this tomorrow. Teresa, thanks as always for joining us.
My pleasure.
Teresa Schutt is Chief Investment Officer, at Harbourfront Wealth Management. Coming up, the CEO of the Royal Bank of Canada on how Canada helps the U.S. with affordability and Canada's efforts to diversify its global trade relationships. That's next. Royal Bank of Canada Chief Executive Officer Dave Mackay spoke to Bloomberg Television on the sidelines of the 2026 World Economic Forum in Davos, Switzerland. It happened earlier this morning. He explained how Canada helps the U.S. with affordability and discussed Canada's efforts to diversify its global trade relationships with a focus on the Middle East. Take a listen.
There's more leaders here than I think there's ever been. Over 850 CEOs, 400 ministers, 65 heads of state. So there's been a lot of dialogue already in the first kind of 48 hours. A lot of joint business government leader dialogue around investment, to your point, looking at making deals, looking at co-investment. every country looking at diversifying trade, bringing business leaders with them to talk about co-investment, or whether it's manufacturing investment, defense spend in Europe and Canada is going up. A lot of discussions about how do we spend $80 billion in Canada on defense. What partners are we looking at, and how do we use that defense spending lever to attract manufacturing investment in automotive, energy investment. So there's a lot of grand bargain discussions going on with business leaders and I haven't seen that before. And so it's different. It feels different. It's transactional, as you said, but it's exciting at the same time. There's opportunity here.
Well, you're talking about the excitement, and yet you are Royal Bank of Canada. You are expanding in the United States, and right now there is a breakdown in the relationship between these two countries. How problematic is that for you at a time where you have been expanding in the United States, and you do see flows, at least in travel, going the other direction a little bit?
I think we're in this temporary world where we're trying to figure out how we're going to trade going forward. But I come back to the core of USMCA. Canada really helps America with affordability. We make things in Canadian dollars. We sell it to the U.S. The U.S. buys it at a 30% discount, whether it's automotive parts, whether it's steel, aluminum, food, and a lot of our canola goes to the United States, and therefore we help keep prices down in the U.S. And if the U.S. were to bring all of that back, it's inflationary. You shortage of labor in the United States. So as you look at the core of USMCA, it's good for America. And I think that gives me comfort that we will come to an arrangement going forward, recognizing this is good for America. It's good for Canada, obviously, but it's good for America, and that's important to the president. There will be change. I don't think it'll be the same agreement going forward. But the core of it, I think, is so important to both sides, and that gives me comfort that we will continue to trade. Canada, and you heard our Prime Minister's message, I'm sure we'll talk about that, it has to diversify trade. I think we've relied on trade to the U.S. substantially, a big part of our economy, and I think that the conversations that are happening before Davos, after Davos, in Davos are very much about, here's what we're good at. Can we find a grand bargain deal? Can we expand trade across multiple countries, whether it's Europe? A lot of discussion with South Asia and Asia, and a lot of discussion with the Middle East investing in Canada. And what's different about Davos this year, honestly, Lisa, it's risk on Canada.
Let's talk about the Prime Minister's speech. The sharpest tone I've ever heard from Mark Carney about Donald Trump without mentioning Trump's name. He's talking about a new world order, saying these middle countries, if you're not at the table, prepare to get eaten. Does that make it harder when you're talking about things like watching the USMCA trade deal? Do you think that the relationship is going to become more challenging between Canada and the United States?
I think relationships are about value exchange. And if there's good value exchange and you both see a benefit to that, then you're going to find the right place. So just as I said, there's great value exchange. $400 billion go back and forth across the border every year because there's value. We're the #1 trade relationship with 36 states. Most of those are red states at the end of the day. So when we think about the importance of that relationship beyond that federal level into the state level, it's really important. So I think you come back and you say, it's good for America, it's good for Canada. That's the basis for an exchange of value and going forward. Having said that, I think the Prime Minister is very clear that we haven't done our role in defending ourselves. We haven't invested enough of our GDP in defense, and you've seen that commitment to spend that money. We have to do that. We have to increasingly defend ourselves and not just our economic security, it's our physical security. We have to play a bigger role in that. We have to defend the Arctic, and we have to invest in the Arctic, and it's a big part of the commitment we've made to NATO and we've made to the United States that you'll see a greater investment from Canada. We have to have dual use investments, not just military, but commercial and economic investments in the Arctic, and Canada should play a role in doing that. So you're seeing that was a big part of his speech yesterday, and we have to create scale. We're in a world of scale. Businesses need scale, countries need scale, and I think the Prime Minister's message was we have to continue to diversify, but diversify in a way that you continue to build scale in what you need. So I think that's what I took away.
When he says diversify, does it mean maybe a new strategic partnership with China? Is that what you take from the Prime Minister?
The Prime Minister was just in China a week ago, and it was a very important delegation that he led to China to kind of reset the relationship after a better part of a decade where the relationship had separated. And part of it was to renew economic ties and to agree on areas where we definitely agree, and to say these are areas where we might not agree, but let's focus on where we agree and where we can build a future together. And I think that was a very positive step. You saw China make a commitment to resume buying our canola oil, and it's a very important market for canola. The United States and China are big markets. We ceded a small part of our automotive market, 3% to Chinese imports. That's an affordability issue. China will bring in affordable electric vehicles. So I think that's good for Canadians at the end of the day. So I think there's more to build on, and I think it's part of diversifying across multiple countries.
Okay, so we've gone all this time without talking about what you actually have done. You just had a year that's phenomenal. You had record revenues for any Canadian bank ever, and you have grown tremendously. You beat all of your targets. I'm just wondering, when you're talking about diversifying businesses, does it go to your business as well? Are you expanding in places like China? Are you still planning to expand in the United States?
Our second home market's the United States. We've grown wonderfully in the United States. We just launched a whole new treasury management platform in the United States, RBC Clear, that's had a great reception. A technology leap. We brought in $25 billion of new money from U.S. senior corporates, Fortune kind of 500. So the United States is our second home market, and we continue to invest there. We lend significantly to U.S. corporates. We lend in the mid-corporate space and the commercial space, and we have the fifth largest high net worth platform in the United States. So the U.S. is very important to us, serving Americans, helping Americans grow. And I told the administration already, yesterday that we've invested significantly in the U.S. economy, and we're part of the solution, and we feel very welcome in the United States. So it's a big part of our strategy. To your point, our strategy has not included China up until now, for all the reasons where we didn't have significant diplomatic ties. We didn't see the basis for that investment, and now we have to review that. I can't say how we would go back in. But if the trade continues to diversify and Canadian corporates invest in China, then we will have to be part of that. What I'm focused on now is the Middle East. Significant investment commitments from the Middle East to Canada. I think one of the themes of Davos is the Middle East is a great place to invest. Abu Dhabi, Dubai, UAE on that side, Riyadh, and Saudi Arabia. Significant commitments on both sides, and you'll see a greater presence from RBC in the Middle East as well. So yes, to your point, it's a great question. You're seeing RBC become a more globally connected bank because Canada is going to become a more globally connected country, and the U.S. is already an incredibly globally connected country.
And coming up after the break, Donald Trump goes back on his ambitions to use force to acquire Greenland. That and more from his speech at the World Economic Forum after the break. Speaking at the World Economic Forum, International Trade Minister Maninder Sidhu says Canada must expand trade with India, especially in agriculture and energy. He says formal talks on a new economic agreement could begin in February. India is the next target in Mark Carney's push to diversify trade as Ottawa takes a pragmatic approach to repairing strained ties. Shares of Kraft Heinz are under pressure today. They're down by more than 5%. That after the food giant disclosed that Berkshire Hathaway, its largest shareholder, may soon sell some or all of its stake in the company. A potential sale will be the first major move by Berkshire's new CEO. And it comes as Kraft intends to split into two publicly traded companies. Johnson & Johnson shares are down about 1.7%, despite the company posting estimate-beating sales in the fourth quarter. The slide comes as individual drug sales saw mixed results, with new cancer treatments increasing by more than 20% and other drugs like Stelara dropping almost 50%. The company has raised its outlook for 2026, even as the White House moves to slash prices for key drug companies. And taking a look at the markets, the TSX bouncing back today. It's up about 0.44% in the wake of the president's speech, the U.S. president's speech earlier today. U.S. markets also responding favorably right now after that rough day yesterday. All of them are up by about 1% in and around that right now. Well, U.S. President Donald Trump taking center stage at Davos for the World Economic Forum. His lengthy speech touched on several key issues, including Greenland, NATO, Venezuela, Canada, and the American economy. To break this all down, we're joined by Michael Cornfield, Senior Fellow at the George Washington University Center for Excellence in Public Leadership. And Michael, thank you very much for joining us.
My pleasure. Good morning.
I guess initial reaction to the speech. I came in at about an hour 15, I think, roughly.
Well, it was almost the same speech he gave yesterday to commemorate the first year of his second term as president. It's his standard mix of misinformation, bullying, and nostalgia. And it's hard to keep track of everything that he says because he deliberately flits from topic to topic. But the clear headline, obviously, is his pledge not to use force in Greenland.
And now that took a half an hour. I think I looked at it. It took a half an hour for him to even mention Greenland.
That's showmanship. He knew that was what everyone in the room was waiting to hear, and he delayed it. He did go quite a bit into detail about his reasoning for his attitude toward Greenland. Not sure all of it is accurate. Certainly, it's inaccurate for him to claim that we gave Greenland back after World War II. We had had treaties and lease arrangements with Greenland, but we have never owned Greenland. We being the United States, excuse me.
No worries. What did European leaders hear in that speech, do you think?
Well, I think they have every right to be alarmed. It's an existential crisis for Europe and especially for NATO, who he took singular pleasure in attacking. And I would think that Xi in China and Putin in Russia would be delighted, are delighted at the spectacle of Trump driving a wedge between the United States, Canada, and Western or all of Europe, really. Dividing the alliance benefits those other superpowers.
And does it feel like that wedge is permanent? Can that be repaired, the relationship? We'll start with Europe, the relationship with the U.S. and Europe.
Well,
after hearing what he said today,
I don't know whether it can be repaired in the short term, which is to say over the next calendar year. Maybe the results of the U.S. elections in 2026 could change it. And after Trump, it could change. But otherwise, it seems like we're in a period of extended discord.
And also in the speech, Canada was mentioned, albeit rather briefly, but rather quite pointedly. I think there were some pretty direct shots by the president. Your thoughts on that?
Well, I mean, he likes to bully people he disagrees with. He does not make the distinction between an opponent and an enemy. Everyone is an enemy, is according to him. And now Prime Minister Carney is on the at the top tier of the enemies list after his speech at Davos, speaking about the rupture. So Trump went after him.
And do you feel that will continue, or is it going to be something new that he'll find?
Well, what gets into Trump's frame of vision is a function of what he sees on social media and on some of our television networks in the United States that he likes to watch. So the more prominent Carney is, the more Trump will take shots at him. If someone else is more prominent, he'll shift his gaze.
And from the business side, what were there? I mean, there were business people in the audience. What were they taking from that speech? Was it just they've heard it before and they're going to keep moving along? I mean, we're kind of seeing it with the markets today, but is that how business is looking at most of his speeches now?
Well, I would make a distinction between high tech and other businesses. I think high tech has an alliance of sorts with the Trump administration, and they're not fazed by his blustering and his bragging. Other businesses, agriculture businesses that are affected by the tariffs, are continue to be alarmed.
And now you mentioned earlier about China looking at this and probably enjoying this speech and seeing the opportunities. Is there anything for Russia here, or are they still kind of on the outside looking in?
Well, Trump seems to be siding with Putin and Russia on resolution of the war in Ukraine. He talks about how he hates to see the loss of life, but if you peer into the details of the negotiations that are being conducted, so far they're very favorable to Russia maintaining the territory that it has seized. Trump does not like Zelensky. Zelensky did not do him a favor with respect to Joe Biden, and that led to Trump's first impeachment. So Trump does not like Zelensky at all.
Okay. Sorry, finish up. Sorry, my apologies.
No, that's it.
Okay, we have to wrap it up there, but Michael, thank you very much for joining us.
You're welcome. Michael
Korenfield is a senior fellow at the George Washington University Center for Excellence in Public Leadership. Up next, we'll get an in-depth look at United Airlines' fourth quarter results. Well, United Airlines beat estimates, mostly driven by demand from premium domestic passengers and international travelers. Let's take a closer look at the company's fourth quarter results with Stephen Trent, independent aviation specialist. Stephen, thanks as always for joining us.
No, thank you. Thank you for having me on.
All right. What are some of the highlights for United? What are some of the concerns?
Yeah, absolutely. So premium continues to be a very good spot for them. And when we look at the overall revenue stream, as in the case with Delta, United generated the majority of its revenue outside of main cabin. So those areas continue to be very good drivers for the carrier in terms of generating higher earnings. We saw that in loyalty. We saw that on the Atlantic. You did have one or two regions that looked a little bit softer, such as Latin America, Caribbean, and some of that was related to military action that happened not long ago. But we think that as we move forward, 2026 foundation looks very good. I think the things that probably we want to watch, there aren't many. I thought the results were very good, but if I were to keep my eyes on this stock for any warning signs, for example, I would keep my eye on how they continue to negotiate with some of the labor unions. Flight attendants agreement, that's an ongoing process and should get more about that. I also think longer term, as we look deeper in the year, you always worry about these kind of black swan events that are going to be a top-down problem. But I think absence of those factors, the results look very good, and we're constructive on the 2026 outlook.
Okay, and just quickly going back to the unions, have there been any rumblings of potential strikes, or are the talks moving along?
Yeah, so I don't think there's any warning flags at this juncture regarding potential strikes and what have you. I think it's more, where will these groups settle in terms of new contracts, and what will be the seat mile cost impact from those new agreements. Now, I think the company's been conservative in terms of their guide. I'm sure they've already accrued for at least some of this as we look forward. I think it's more, do we get some kind of agreement that's going to put maybe at least some smallish unexpected pressure on seat mile cost, but nothing in terms of wild dispute or anything like that at this juncture.
And going back to the growth, loyalty program was up and premium as well, but also basic economy. And I know it's been kind of poo-pooed a little bit, but it was up by 7%. Were they doing anything different, or how does it compare to other airlines? Were they doing anything different? Are they doing better when it comes to that basic seat?
Yeah, you know what? I think the big three have really been very effective in how they're managing basic economy. So you do have in the United States, the discount airlines really under a lot of pressure. The discount airlines don't really have premium. They're all trying to do premium. They don't really have lucrative co-branded card programs like the big three or Alaska Air have. But if you're one of the big three, you have the opportunity to take share. You can, in some cases, price at least a smallish amount of that capacity aggressively and help fill your planes. And if you can do that, the marginal cost of adding a few extra passengers is probably not going to be that big a deal, considering how much money they're already making on the front cabin and how much money they're already making on ancillary. So that's probably a place where United, for example, had some low-hanging fruit when we think about main cabin's performance.
And have we heard? Has any airline mulled the idea of like an all first class or all business class plane on different routes?
Yeah, look, you hear about that from time to time. Some airlines have actually tried this idea in the past. A transatlantic service in one airline, and forgive me, the name escapes me at the moment. One of the big three doing that, I would say I'd be surprised if they did something like that. So certainly you kind of see them moving in the other direction of that. Not at all to say that they're suddenly going to become all basic economy. But what I am saying is you are hearing about some experimentation, for example, within the business class cabin to maybe unbundle a little bit of that. For example, maybe have a business class seat where you don't get lounge access. And maybe if you pay a higher ticket, you get some lounge access. You pay a higher ticket, you pay a lower ticket, for example, and that seat becomes non-refundable. So further refining what's happening in the broad buckets, I see potential for greater differentiation within the buckets. But I would say, going all business class, one of the big three, I would be surprised to see that.
Okay, we have to wrap it up there with Stephen. Thanks as always for joining us.
Oh, thanks for having me on.
Stephen Trent is an independent aviation specialist. Coming up, Netflix reported better than expected earnings, but the stock is under pressure. We'll find out why after this. Well, shares of Netflix are under pressure. The streaming giant reported a fourth quarter earnings beat, but warned of rising expenses because of its all-cash bid for Warner Brothers Discovery. Let's get more now from an analyst who covers Netflix. Alicia Reese is a senior vice president of equity research covering media and entertainment for Wedbush. Alicia, thank you very much for joining us. Netflix is having quite the time right now.
Yeah, they are. They reported some great results yesterday, but expectations are incredibly high right now. The disappointment was not on the subscriber side, though, as it has been in the past. The subscriber number was actually quite in line with what expectations were. However, with all of the live events and all the hoopla around Stranger Things and just all the content they had, the engagement numbers were not quite as high as some had expected. I think most importantly, the advertising has not quite reached the level that people had hoped it would at this point. So in 2026, the planned price increases are going to likely push more people onto that ad tier and get more people to get that viewership on the ad tier much higher. And as Netflix really hones its advertising strategy and targeting, they'll be able to really increase the advertising revenue in 26 to at least that $3 billion number that they guided to.
And how much did they miss by this year with the ads?
So they reached 1.5 billion this year, which was 2.5 times what they were what they were at last year. The problem isn't, the subscribers. They're getting the subscribers, but they didn't have the targeting capabilities of a lot of other advertisers, that advertisers really need that attribution and all of the data to support these ad campaigns, especially at the CPMs that connected TV streamers are requiring. So, as Netflix hones that strategy, they'll be able to get a lot more advertisers on board and fill all of the inventory that they have.
And with their costs, they were, I believe, was it 10%, I think, for films and TV? Is that something that caught them off guard?
No, I don't think so. I think spending on content is absolutely reasonable as long as there's the rise in profitability that justifies it. And whether or not the M&A deal goes through down the road, they need to drive engagement and they need to drive profitability, which requires the ad tier to really start performing remarkably well. And I think Netflix has all of the tools to make that happen. But to keep that engagement high, they do need all the content.
Are they putting all their eggs in one basket with the ad tier, or no?
No, I think that it's an absolutely necessary path that they need to go down and that they need to win. If they don't, the engagement, they're not going to be able to spend that much on their content, and they won't keep the same level of engagement. They just can't.
Now, and the one thing that Netflix has managed to prove is it is a survivor. Nobody thought people would get DVDs in the mail, right? So they managed to adapt. Right. They managed to adapt, don't they? And with the Warner Brothers deal, what's going on with that? What kind of an impact? The fact that it's kind of going back and forth, is this the norm and okay, or are people starting to wonder?
I think there are many concerning elements to it. At this point, it's a wait and see to see what the shareholders choose to do. If they choose to go with Paramount because they believe that the Discovery Global assets are worth, at or less than, $2.25 per share, then they'll go with the Paramount bid. If they think they're worth more, then they'll try for the Netflix bid and to spin off, Discovery Global. But the regulatory process is going to be long, drawn out, and very difficult. There are a lot of hurdles that would need to be passed, and there's no certainty that that's going to pass scrutiny in the end. You have not just the U.S., the DOJ, you also have the European Commissions and the UK to pass. So that's going to be a long, drawn-out process. I think it's better now to just focus on Netflix's core business, what they have to offer, and what kind of growth they can show in 26 and beyond.
And so what do they do while all that's unfolding? I mean, if by the end all of a sudden they find out they've got nothing, what other things are they looking at to trying to offset that, the possibility they may not go through?
Right. They've just signed with Sony to get a lot of Sony assets on the streamer, just getting as much content as they can at reasonable prices. It's not easy to do when you don't own the content. That's one of the reasons they want Warner Brothers, is obviously to get all of that content and not have to pay for it. The Warner Brothers content that they have had on the Netflix service has done very well for them, especially the library content. So it certainly behooves them to buy that in the long run and have all of those assets to work with and get more people on the service, more engagement, and be able to leverage that advertising tier. Ultimately, though, if they don't get that asset, then they can continue to license content from others, or potentially go after the likes of Sony or other small studios.
Could you see that happening, going after Sony or somebody like that?
It could, you have Sony, you have Lionsgate. There are not many, A24. There are not too many studios left, solo and standing. But, certainly Netflix is going to go after some content deal if this doesn't work out with Warner Brothers.
Okay, and with all this unfolding, regional growth outside of North America, what opportunities do they see?
Oh, yeah, there's plenty of opportunities for growth outside North America. You have tons of opportunity left in Africa, Middle East, Asia, all throughout Asia, especially India. India was a bright spot for Netflix. As long as they keep the tiers priced well, and if they do that in an ad-supported way and have mobile-only plans, if they're priced well, this is great engagement. And if it's ad-supported, that certainly helps Netflix to grow in a more meaningful way.
And what happened with India?
India saw some really nice growth in the quarter. So that it was a nice bright spot. They saw some really good engagement, and they saw some nice revenue uptick for the region.
Okay, Alicia, thank you very much for joining us today. We appreciate it. Thank you for talking about Netflix with Alicia Reese, is Senior Vice President of Equity Research covering media and entertainment for Wedbush. Well, Market Call is coming up next, and today on the show we have Eric Nuttall. He's partner and senior portfolio manager, 9 Point Partners, and we'll be taking your questions on energy stocks. Let's head over and take a look at the markets and see what's happening right now. We'll start with Bay Street, and you see actually after the rally to start the day, it's now down. It's almost down to flat. It's up by 0.06%. I just want to bring up, if we can, one company that worth mentioning to see how they're doing. GFL, just on the news of what happened with them today. Let's see how they're doing. They were up last time I looked. Let's see if they're still up. Yeah, they're still up by about 5%. It's green for life, and they just announced that they're moving their headquarters down to Miami Beach from Vaughan, just outside of Toronto. They're going to remain based in Ontario, but they say all their growth opportunities, 2/3 of their business is down in the States, and they want to be on the New York indices as well. So that is helping them today. You can see they're up by about 5%. And we'll head over to Wall Street for a minute, and everybody, for the most part, seemed happy with what they heard from Donald Trump, but even they're calming down a little bit. They were all up over about 1% at one point now. You can see they're up by about a half, and the NASDAQ is barely up by a quarter right now. So we'll see how the rest of the day goes. That's it for Morning Markets. Thanks for joining us. We'll see you tomorrow.